Every bull cycle begins with noise, chaos, and endless projects claiming they'll be the next Ethereum killer. But hidden inside that noise, there are a few quiet signals that separate the hype from the real opportunities. Sometimes it's not about the tech buzzwords or the promises. It's about spotting the early alignment between institutional moves, ecosystem growth, and market structure. That's where fortunes are made. And right now, those signals are flashing bright for SEI Network. Yesterday delivered one of the biggest milestones yet. 21 shares filed an S1 with the SEC for a SEI spot ETF. And not just any ETF. This one is structured to potentially include staking rewards if regulators approve. That's a breakthrough. Institutions won't just be able to gain price exposure, they'll also capture staking yield directly through a regulated investment vehicle. It's the kind of catalyst that can unlock billions in liquidity and accelerate mainstream adoption. On-chain activity is telling the same story. Weekly active addresses on SEI have exploded by 500% in just 6 months. That isn't retail hype, it's proof of adoption. SEI is emerging as a core settlement layer for digital asset markets, and the growth shows that more projects and users are relying on it every week. When markets move faster, capital follows the speed. And SEI is proving it can be the highway where financial use cases settle in real time. The groundwork for this didn't appear overnight. Earlier this year, SEI was already gaining momentum across DeFi, GameFi, and institutional partnerships. The ecosystem's rapid growth has been matched by its presence on the top exchanges. Binance, Coinbase, Crypto.com, and Kraken have already listed SEI, showing the level of credibility the project commands. Only OKX remains, and that's simply a matter of time. For me, this conviction started months ago. In Q1 of 2025, I began building my position around 17 cents. I added again between 24 and 26 cents. Today, even with SEI trading at 28 cents and holding a $1.71 billion market cap during a market-wide correction, I see anything under 30 cents as prime DCA territory. And if we get a dip closer to the 20-cent zone, I'll add more without hesitation. This is not financial advice. I'm not a financial advisor. Always do your own research. I'm simply sharing my own strategy. Why am I so bullish? Because the signals align. Institutional filings, massive user growth, exchange adoption, and a strong ecosystem delivery. These elements don't appear together by accident. They're the foundation for explosive growth once the broader market reverses. My conservative target for SEI remains between 20 billion and 50 billion in this bull cycle. That would push the token comfortably above $3, with upside for much more as institutional liquidity enters the system. This isn't just speculation. It's the logical result of fundamentals aligning with price. The ecosystem is expanding daily, the team continues to deliver, and institutions are now actively positioning. The chart is bullish, the catalysts are stacking, and the story is still early. And as I always say, wealth in crypto isn't created by chasing the herd at the top. It's built by positioning early, when it feels uncomfortable, when the majority still doubts. That's how millionaires are made. Dr. Money Glitcher.